All right, we're back here with another episode on our podcast, Kiss My Assets, and happy to have John come on today. We have exciting news. We just released Venture on 12th Place, which is our latest offering. This is a 30-unit building in Central Phoenix in Midtown area, and we're really excited about the offering. And this gives us a little bit of time to talk a little bit more about some of the details of the offering, because podcast is a little bit longer format. So wanted to bring you on, John, and maybe just start off with what were your first thoughts when we first looked at this building, when it first came across your desk? What were the first things that stood out to you about it that were positive?
All right. So one of the advantages that I bring to the table is that my 30 plus years in this business, I've sold so many of these buildings. So this is a building that I've sold before, and I've sold it, I think, 4 times before. And the reason why it's important for us is I know the building, I know who's on it, I know pretty much what they've done to it, and I know what things can be done to improve it. And I know what things people didn't do to it. So as soon as I found out about it, and I found out the price point, and then we were able to even get a little bit of a better price point on it, because we always negotiate hard on things, and we're really happy with it. So it's a great location, Central Phoenix, right near the Arizona Country Club, which I absolutely love. The big units. The townhome units, you saw when we walked through it, they're gigantic. And then the other thing I'm really starting to get excited about are the renderings. I don't know if you've seen all those that our teams are working on, but I think Haley's done a fantastic job on the vision of what the project's going to look like. And those renderings, we can definitely make the property look like that, and that's going to make that property pop. And because we always do a great job on the projects, but this is really going to shine based on the way the concepts we've come up with.
Yeah, one thing you mentioned early on is that I think you sold this to a former professional baseball player, basketball player. We won't say which one, but you've traded this property before. You've been involved in transactions around this property. So when it came up, you knew exactly where it was and some of the details about it, that when you're looking for other properties that you have no basis in, no
line of sight. No line of sight. So it helps. Here's a really good example of this one. Friends of mine bought this property in 2011-ish, and they bought it at a foreclosure auction. And I was at the auction with them, and they got a call a few months later from a roofing company that said, we did an investigation on wind damage in the area, and it turns out that this area got hit by very strong winds and hail last year, so probably 2010. And your roof, we can make a claim to replace your roof. So I know that roof is 10 years old because they just put a new roof on that 10 years ago. And sure enough, we looked at it, we're like, yeah, it's a really good looking roof. Probably 25-year shingles or 30-year shingles on that building. But that's stuff I knew about it. And there's a bunch of other little things like that too, about the way the property's put together and some of the flaws and the way that it never worked right. But it's a great project, and I'm really excited about it. And it also, here's the other thing too. I say this a lot about our properties. I love when we buy a property that hasn't been touched very much by previous owners. Generally, not everybody's a really good contractor or a good maintenance person. So we buy properties. I like ones that haven't been touched. Like Central was owned by the same owner for 40 years. He did upgrades and renovations, but mostly repairs. It gives us the opportunity to come in and really do a good job on it. And the same, so we don't have to undo what other people did to a property and fix problems. We start from scratch. The same with this property. The same owner's owned it since 2012, so it hasn't gone through iterations and half fixes. Now we can go in and go, great. We can just completely redo things and make it look as good as we can.
And one of the things that I noticed about it, once we got some of the diligence materials, is the rents are very low. They're $975 is the average rent. And even though the property isn't renovated, that rent is well below the market for a non-renovated property. And based on our comps, an unrenovated property should be more around $1,250, $1,300 for a non-renovated property. So it's already below the market without renovating it. And then as we go in and reposition the property, we renovate it, we bring up, we put in a new design, both exteriors and interiors, which kind of shifts who's going to rent this property to more of a young professional, more of someone who wants something new. And that was the other thing that I think was appealing to this about this property that you brought up is where it's located, adjacent to downtown and the hospitals, the law firms, and close by. Kind of talk a little bit about why you like that part of it.
Yeah. So Osborne's always been kind of like the secret street to go downtown if you're on the east side of Phoenix. It doesn't have a lot of lights. It's a direct street and it's a little smaller, but it's also been a street that's there's some schools on it. But once you get closer to downtown, close to 16th Street and 7th Street where we are, there are law firms, there are insurance companies, there's a lot of businesses along that street, and that whole area serves some of the secondary office market in the Phoenix area. So there's a couple architecture firms further down the street there too. So this property is going to respond really, really well to the tenant demands in the neighborhood. And another example of that is, we drove around my Tahoe around the neighborhood. I pointed out a bunch of new construction projects. And these are not big properties. These are maybe the biggest, probably 30 units or 25 units. A lot of them
were infill projects.
Yeah, a lot of them were probably under 10 units. And for developers to take that chance to build those in those neighborhoods tells you that there's a demand for that. So I really like the opportunity. I like the construction. This is 2-story. It's masonry construction. It's not frame and stucco. Yeah, it's very solid when you walk on the second floor of the units. And I like the way it's put together. And it just has so many opportunities. So when you see the renderings and see what we're doing to make the windows pop, how we're fixing the courtyards, how we're fixing some of the landscaping that never really has gotten there. We're going to leave the nice mature olive trees that are there, but we're going to really make this property look good. And our interiors are always spot on when we finish our interiors. So the exterior and interior are going to really make this thing look great. And I think people driving by are going to rent this and be very, very happy. And I'm excited to work on it.
Yeah. And the other part about the location, once you get off of 51 on Thomas, right there is Phoenix Children's Hospital. You drive a little further, just past Central, and there's St. Joe's.
Right.
Then 1 mile north on Indian School and 7th Street is the VA hospital. I live in that same vicinity, and there are a lot of healthcare workers who are there, young folks, nurses, newly out of school, single, or newly formed families. And that's really what's driving a lot of the demand in this area is folks who want to live close. They don't want to live out in the suburbs anymore where you have a 45-minute commute. And this gives them the opportunity to live in a newly renovated property, 5-minute drive, 10-minute drive, maybe even a bike ride to work, which I think is really appealing to folks. And so that location is really primed for that kind of target audience.
Yeah, and this is a property, and I know you've lived in a couple of our properties. You always test it out for us. This is a property that I would live in. This is a neighborhood that I would love to live in. It's really walkable. The restaurants in the area, there's again the Phoenix Country Club that's not accessible to the public. It's still a big amenity because it's there. It's an anchor of the neighborhood, and access to light rail, access to the freeways. And we don't have to build a new project in the neighborhood to be in the neighborhood. We're buying one and renovating it, and they're big units, which I keep saying over and over. They're big units. They're really fantastic units for people to live in.
So we've talked a lot about the property, and there's some great materials on our website. If you log in, you can go in and see all the information about the rents and all the other financial information and our renderings and our plans. But I want to talk a little bit about what we're seeing in the market right now. And this is something that your insights are really valuable because we know that the market was really hot as interest rates were low, similar to the single family housing market. People were buying up as much as they could at 2 and 3% interest rates. Same thing happened in multifamily and commercial real estate. Now interest rates are coming up. And we see a little bit of a education process for sellers, just like you would with a single family home when a seller, thinks that the prices are going to continue to keep going up and up and up. Now things are starting to level off. They're not going down, but they're leveling off. And there's a little bit of an education process for sellers of apartment buildings when it comes time for them to sell, for them to say, okay, I get it. Things are a little different now. Can you talk a little bit about what you're seeing at AVI with that kind of educational process?
Yeah. So a few months ago, we identified this as what was going to happen. We kind of saw this, and we've seen it before. We saw this at the beginning of COVID, March 2020, where the markets don't like uncertainty. Investors don't like uncertainty. So right now, interest rates went up. Luckily, our rents keep going up, but because interest rates went up, home affordability is now out of the grasp of a lot of people, which is going to push them into being renters. A lot of people aren't thinking about that, but that's what's going to end up happening. We have still a huge amount of people moving into the Phoenix metropolitan area. And I don't think that's going to slow down. I think as far as employment growth and job growth, so employment growth being opportunities, job growth meaning there should be created, and then the amount of companies that are moving here are all going to help foster more of that. And then to top it off in really specific to the Sun Belt, it's just the fact that if people choose to be somewhere, we saw this again in COVID, they're going to be here. But yes, interest rates popping up have an effect because it creates a bigger cost of carry cost for property. So it's there's an equation that says that a 250 basis point jump in interest rates, so your loan going up by 2.5%, conversely causes a 30% drop in value. Now, the difference for us is that in Phoenix, we continue to have strong rent growth, so we'll make up for that. But we certainly are going to see some people and some of our investors, and we're seeing it now, people taking things to market because they wanted to get ahead of it. And then we're seeing the buyers come in and saying, we can't pay the prices that the sellers want. And the sellers are a little frustrated thinking that they're not going to see the appreciation that they saw before. I'm a contrarian right now. I firmly believe that we're going to be in a market of stagnation, which we saw in the early 1970s, where we're going to see business growth stifled a bit by the recession, but we're going to see inflation. And remember, hard assets move up in value in an inflationary period. It's going to cost more to build a building. It's going to cost more to operate an apartment building. We're going to find out that our rents are going to continue to rise, and people are going to be looking for more rentals and can't afford to buy homes or apartments or condos, I should say. And we're going to see more people coming here. So the net effect is that the higher interest rates did cause a little bit of a change in valuation and expectations that sellers haven't quite met yet. And the buyers are coming back saying we need a little bit of a discounted price. But I think net, we're going to see a much better result in the Phoenix and the Sun Belt areas because of our rent growth. And I feel really strongly about that. So that, just between you and I, the way we've been talking, we're confident in the market and we're stepping forward and buying projects because we know we're going to continue to see appreciation and we're buying good assets in core neighborhoods.
Yeah, because the other thing is that is kind of counteracting the potential recession, which we're likely in, and inflation, is that you can continue to move rents up when you own an apartment building and rents are moving up in a market like Phoenix. And the other part that is kind of behind the scenes is we've passed on a lot of deals as there's this kind of education process for sellers. We've looked at a lot and have pursued them a little bit, back off of them if we can't get the price we want. On this particular deal, we were able to work with the seller. The seller understood what was happening on the market, and we got a good entry price at $222 a door for 2-bedroom units in this location. And I was very happy with that entry price based on the other things that we were seeing and based on where the rents are going and where they frankly they are today. And the other part about it is that we needed this slowdown. We couldn't handle this continued acceleration in rents, in property values. It was not sustainable. It was really driven by those low interest rates. So this was something that we're happy that it's happening, right? And to your point, being a contrarian, this is a time for us to be smart about the assets that we buy, but we're going to continue to buy these assets in these core areas that are good assets that we identify.
Yeah, and I'll throw one more thing out there. Another common sense thing that you have to step back and look at it from 10,000 feet. I've heard this conversation at coffee shops, and I just heard it again this morning, but somebody was looking for an apartment And they said I could either move further outside of town into a suburban area and then have to pay for the cost of transportation, gas, and travel, or I can live in town and pay more for the apartment, but not have to deal with that. And I think the choice we're going to see being made over and over and over, especially as approaching $7 a gallon gas and possibly up to $10 a gallon gas, is people are going to say it's not worth me moving out to the suburbs right now and having to commute in, because the fuel costs very quickly will eat up what I would the difference in rent. And I'd rather be in an area where I can walk and take a short Uber or bicycle. We're going to see more of that. And I think that's a real reality of the consequences of more expensive gasoline.
And that's new for people who have lived in Phoenix a long time, because we're used to being able to drive on our freeways, and 20-25 minute commute isn't a big deal. And we're buying gas for $2 a gallon. It's not a big deal, but it's urbanization that's happening in downtown. And we saw that when the downtown started coming back. If you drive downtown now, you're seeing 6-7 story buildings because people want to live there. They want to be able to ride light rail. They want to be able to go to the activities. I'm one of those people. You know, I lived in Scottsdale when I first moved to the Valley, and I wanted to be closer to stuff. I didn't want a long commute. So that's where, as the maturation of Phoenix and the Valley occurs, we're going to see more of that. As more people move to the Valley, more people want to be close, and they don't all want to move out to the suburbs and have long commutes. And I think the gas price just certainly accelerates that.
Yeah. I mean, there is the other side of it too. There could be some people that say, I don't mind living in the suburbs because I telecommute or I work from home. And then that's a great alternative, but they're still going to want to go out. And again, try to bring it down to the everyday level. If we had $10 a gallon gas, my Tahoe, for example, takes about 20 gallons to fill up. That's $200. And I generally go through at least a tank, almost 2 tanks a week of fuel. That's $400 a week in fuel. I mean, the numbers are going to get astronomical for some people. So would you rather pay a couple $100 more rent to be in town, or would you rather pay $1,000 a month more in fuel, which was never that much of a consideration, right? Think about that: $200 a tank, and you're going to fill it up. Even if you fill up your tank once a week, that's $800. So would you rather pay $200 more rent or $800 more in fuel costs? And I think that's the equation that most people are going to start looking at, and that's why we're really concentrating on core neighborhoods and core walkability. I think that's very important to us and our success as a company.
And I think the other thing that we have to remember is Phoenix continues to be more affordable than a lot of Western markets. So we talk about, like, this building, the final rents being about $1,730 a unit for a renovated 2-bed, 1-bath unit in a core location. That's actually very affordable compared to a lot of Western cities, certainly compared to a lot of Eastern cities, East Coast. So we continue to be a nice, affordable place as more companies move here. This is the type of asset that I think continues to do well. So just want to kind of circle back. This is great because it gives some insights into the conversations that we're having, some of the insights into all the things that you see at ABI. ABI continues to be the #1 seller of apartment buildings in Arizona. I think you guys just got that award again. So you're seeing that transaction flow, and that's a big advantage that goes to our investors. This project is one that we've waited for, because we passed on a lot of ones that we got close with. We've dated a lot before we decided to get married. And on this one, it made all the sense in the world when we got that price point and with these larger units in this location. So very excited about this project. Thanks for spending some time and diving into this, John. And we encourage everybody who's listening to go on our website, take a look at the property, Venture on 12th Place. All the details are there. Watch the videos, and look forward to having your participation with us.